Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, September 23rd, 5:08 p.m. Eastern Time, coming to you from the financial capital of the South. That, of course, is St. Augustine Beach, Florida, and this is the Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. You can see by the trend gauge over here. As Connor so eloquently put it, when he was doing Friday's video, green means grow. I used to have terms like uptrend, downtrend, bearish, bullish, but it really is a lot simpler to just say we've got the coveted four green arrows. That means GROTECTION is in grow mode. We've got red arrows. We'll be in protect mode. It's that simple. So a couple of minor changes to the trend gauge over here makes it a little bit simpler, but still, as always, every day we'll track the strength and or weakness of market leaders and the major indexes across three time frames, that being the 21-day short-term exponential moving average, the 50-day medium-term 50-day moving average, and long-term 200-day moving average. And all the indexes are trending above those levels, and certainly plenty of market leaders acting well. So what happened today, coming off of a big move up Thursday in lieu of the Fed cutting interest rates by 50 basis points and also forecasting future cuts. Big move up on Thursday, consolidation day on Friday, higher high today. Tight range and light volume, but the prices still count, another all-time high. Here are the numbers, 21 over 21 list. Only a split 11 up and 10 down, but on average, the winners were up more than the losers. All in all, average of up 0.76%. The big eight up 0.66%, mostly because Tesla was up 4.9% on the day. RG8, this R8 growth ETF composite lagged a bit, only up a quarter percent. S&P 500 opened up 0.2, finished up 0.28. Equal weight S&P 500 a touch better, up a half of a percent. NASDAQ 100 up a little less than a third of a percent, equal weight, right in the same neighborhood. Dow up 0.15, mid caps up 0.52. Russell was the laggard on the day, down a third of a percent. Global 60/40 stock and bond up 0.22. Our flagship GROTECTION portfolio up 0.26%. Mildly underperforming as a couple of our names didn't participate in today's uptrend. We'll discuss that as we get into reviewing everything that we own and also the tail of the tape. But we'll start here with the S&P 500. And I think we've hammered this point home enough. We mentioned it in the podcast last week. Connor hit it home in his video. Ted reiterating again, as long as we stay above this band of what was resistance that we've broken above last Thursday, tested it on Friday a couple of times. They'd clear above 5,700 today, but this band is basically 56, 52-ish to 5690. Big support area. No doubt would not be surprised if we tested it some more, but as long as we don't fall back below that range, we are in an uptrend and kicking off the next leg higher just by price definition. Higher high on Thursday with the breakout level. I like that we tested it on Friday and it held, tested it twice actually, and upward bias today on the S&P 500. Let's go to the NASDAQ 100, which still has some catching up to do. Tight range here, right at the top of this handle. This 485.54 level is the pivot point for this cup and handle in the NASDAQ 100, and that's what bulls are looking to burst above. We continue to note the relative weakness, really not on a relative basis. We've been about neutral with the S&P 500 over the past 2 weeks. So still with some work to do. And if these tend to lead up and lead down, well, we're waiting for it to lead up, and several of them coiling tightly, some really outperforming, some strength coming on, namely Tesla and Nvidia in a very tight range. right around its moving averages. Nvidia and Microsoft had a bit of selling pressure on them last week with rebalancing in XLK as they adjusted their rebalancing rules on Friday. We also had quad witching on Friday with options expiration, and that always adds volatility into the equation. Let's go to the Dow Jones Industrial Average, another all-time high after bouncing at that 40,000 level with the upside reversal 2 weeks ago. Let's go to the S&P 400 mid cap. Update today by 0.5%, challenging. Let's go to a monthly just to make sure. Yep, we are at all-time highs here, but if you we'll bring up the Russell and you'll see that we're not. So after bouncing at the 200-day moving average 2 weeks ago, that quickly slingshotting back up to all-time highs. Here's the Russell 2000. If you go to a monthly chart here, you can see just below those all-time highs here. We had this spike up back in early 2022, late 2021, and haven't been able to come across there. So this looks like a bit of a handle that we're putting in here, this being the pivot, but the all-time high is above 2,300. Let's go to the equal weight S&P 500, and you can see that's looking just fine as well, trending higher. Near all-time highs as well. Didn't make it today with an all-time high close the way the market cap weighted did, but still looking pretty good. Let's go to some inter-asset correlation now. We'll start with the dollar. And dollar down at the bottom of this range. I threw a little bit of caution out there last Wednesday after the Fed noting that the dollar may have shaken out here in a stronger dollar, and also noted at the time that there was, I think it was 1990, that the S&P 500 was at an all-time high, and we had interest rate cuts by the Fed, and that put in the high. That certainly was a 1 day setup, and that theory is thrown in the trash can, happy to say, with the higher highs on strength that we made on Thursday. But here's the dollar near the bottom of the range. If this rallies, it would provide a little bit of a headwind. But the VIX. VIX is where we want it, below 16, 1589, down 3.52% on the day. Take that every day of the week. We want this below 16, and we're seeing the ATR contract as well. We always highlight that on the tail of the tape as well. How about precious metals? GLD up another all-time high. GDX, gold stocks, down a bit after making a high, and silver, SLV down 1.5%. Go to Bitcoin. IBIT had the gap up on Thursday along with stocks, indicating risk on. 2 day consolidation since then. On to bonds. Tight range on bonds today, bouncing at the 21. Bond prices down just a tad. TLT, the long bond, also down a bit. That means that the yield is going to be up slightly. As you can see there, there's TYX and TNX. Yield up slightly as well. That's our inter-asset correlation. Let's go to the tail of the tape. VIX actually at 15.89, as I mentioned. And that was down 3.5% on the day. Little bit of news. Fed's, and he's kind of mouthpiece for the administration. Austin Goolsbee said likely many more rate cuts over the next year. So the Fed, that's the message that they started to pass along last week. Recalibration, I believe, was the word that Jerome Powell used, and we certainly have after pausing the increases and staying put for a while, the first cut, as long as inflation stays there, and the economy doesn't show too much strength, we'll continue to see interest rates coming down. Heat to today, we've been hitting it, hammering it, but S&P against that prior resistance range, which is now flipped to support. So 56.52 to 56.90, Yes, we are indeed still above that. Two of the last 3 days up after the breakout, 9 days up above the 8 and 21 day moving average. Tight range all day, which we're good to see. Here's the ATR at 1.19% and falling. From a sector standpoint, aerospace and defense up, builders up, uranium up. That CEG Microsoft agreement last week with them planning on restarting 3 Mile Island and selling the power to Microsoft. That has lit a fire under the alternative energy names. We'll take a look at a couple of those charts as well. Basic materials, energy, industrials, and discretionary to the upside, to the downside, banks, biotech, silver, and gold stocks. Portfolio, we added more to our MSTR. They've got a ton of Bitcoin on their balance sheet. This is a leveraged Bitcoin play, essentially. Increased our size in that. And we went back into small caps on this 2 day pullback down to an attractive level right near where we sold that after a negative reversal last week. Bottom line, our adjusted beta from a 1.55 to a 1.67. Bottom line on the day. Tight range and light volume, but S&P and Dow notch another all-time high. Keys for tomorrow. We're sticking with that same theme until something else comes up that would be very key to watch. But for now, we're just focused on staying above that former resistance range, which is now support, and that's 56.52 to 56.90. First off, let's get to 2121 for this week. Had a hard time chopping the names down. We did a couple buys outside of the 2121 last week, but from a relative strength standpoint, we own these, but Nvidia coming off the list. And again, this is just from a relative strength standpoint. We are really liking, and we do hold a position in this. We're really liking this tight range here. It's setting up for a move one way or the other, obviously with the upside bias to the market. We're looking for an upside breakout. And also, if you look at semiconductors, those are kind of in a tight range too, right around the 50-day moving average. And they've also got some relative strength catch up. That certainly has room to run, not extended, is I guess the point that I'm trying to make. Also cut Lilly just on a relative strength standpoint, hanging right around the 21, not that strong. We added to the position on this attempted volume move last Friday. It squatted a little bit after we bought and down on the day, but certainly a nice tight setup for Lilly as well. Here are the carryovers, 19 carryovers. We're going to start off with what we own in-house. As always, marked with a green arrow here. So Kava made a new high, reversed a little bit on lighter volume compared to, actually the volume was skewed on Friday on quite a few names because of options expiration. Here's ITB, the home construction index. We actually own Nail, which is a leverage play of this, but we make our decisions on Nail based on the underlying ETF. Don't go by the derivative because those leverage charts can be misleading. So you want to always go by the derivative. For example, if you own UPRO or SPXL the way we do, we don't make our decisions based on those charts. We go by the chart of the S&P 500. So that's ITB. ServiceNow also made a higher high and then reversed a bit. Nothing wrong with that. Oracle going sideways after its nice move higher on earnings. BDX, we own Nugget, higher high and then reversed today. Uber, considering adding to this position, showed some strength last week, up 1% on the day. Tesla, this is the big mover as of late in the portfolio. We started a position in this last week, closed right at the 250 level today, forming the nice right side of a cup. MSTR is the one we added to. This is the leveraged Bitcoin play right around that 150 level now. Here's what we don't own. That is in the 21/21, starting with GEV. And again, this is in that alternative energy. I'm going to go through probably about a half a dozen names here, and you can see how money is very clearly going into these plays. Extreme relative strength. 200 would have been a beautiful entry. last week. So let's take a look at some other names related to this. BRT, this isn't alternative energy, but it's data center cooling related. That's starting to show some relative strength. VST is a utility. You can see two strong days up on that after that CEG announcement. NRG, another utility, very tied to providing nuclear power as well. Two nice days up there. GEV, GE Vernova, just rocking. No, I showed that GEV CEG was the other one. And look at that gap up. This is the one that actually had the agreement. Gap up, higher high today, reversed a bit after that, but certainly. And then let's go to uranium if you want to start just bringing that into the equation. CCJ, two strong up days, and the uranium ETF, URNM, two strong up days as well. So very clearly some money flowing into the alternative energy slash data center hardware and power support type names. Palantir made a higher high today. IoT continues to trudge higher along the 8. SE was the big winner in the 21 over 21 today, up 5.8% on 75% above average volume. Axon continues to just climb the 8 EMA higher. Affirm, big move up last Thursday and reversed. Two tight consolidation days since then. Shark Ninja pulling back to the 8 EMA. Sprouts Farmers Market made a higher high today. Flutter Entertainment, 5-day tight consolidation here. Keeping a close eye on this one right at the top of this nice 23%, 128 day long base. Guidewire trending higher since its earnings gap up. F5 also continuing to work its way higher along the 8. DoorDash, tight day right here at the 140 level. Zillow, the biggest down mover today in the portfolio, down 2.3% after having 5 or 6 strong up days breaking out of this cup and handle. And that's your 21 over 21 list for this week. And that is going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner, Dan Stewart, can be reached at dan@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. As you should be very aware, our flagship portfolio, GROTECTION, dual mandate, grow assets during uptrends. Things start to pull back a little bit. We go into protect mode. We start to break the 200-day moving average. We just get the heck out of the way. This is where all bear markets occur. And this is how we dodge the COVID bear, the Q4 2018 bear, and the 2022 inflation bear market, just by following the trend gauge, the moving averages, and recognizing that when you're below that black line, this is where risk is high. Sometimes you only spend a couple weeks below there, and we're willing to be out of the market or lightly invested during that period because we know what can happen, and we never predict what will happen, but we know the setup. We know what happens when you're under that big black line, especially when the slope of the line rolls over. That's when you're at the highest risk. And with that, I will wrap it for Monday, September 23rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.